Ladies and gentlemen, Bitcoin is doing a treacherous march through very, very dangerous territory at this point in time. Why do I say that? Well, I'm saying it not because of the charts, not because of any given line on the Bitcoin charts, although there are lines that are under serious pressure right now, like this line stemming backwards from 2021, which is seeing an unconfirmed breakdown, as well as Ethereum breaking down from a major support line there in yellow. But I'm saying it more broadly and more importantly because of the macroeconomic environment. The fact of the matter is right now, the DXY, the US dollar index, as well as interest rates and the Federal Reserve's general sentiment is not really where it needs to be at this point in the cycle. We know that Bitcoin moves cyclically. We know that every 4 years the cycle repeats itself. It goes beyond Bitcoin. It goes into macroeconomic trends that stem backwards from the 1950s. Okay, so this is bigger than Bitcoin. And seeing such a significant deviation here at this part of the cycle is actually a very major thing, which is a cause for genuine concern. I've been raising the alarm for the last 3 consecutive videos ever since Bitcoin's rejection from $106,000, just $2,000 below its all-time high, and progressively over the course of my last 3 videos, I've been getting more and more vocal about the potential dangers approaching. Well, we are in a dangerous position right now. Now, let's be clear. I do not think that Bitcoin has done irreparable damage. I do not think the bull market is over. I do not believe the 4-year cycle is broken. I don't think we have evidence for any of that. What I'm simply saying is there are serious threats here, and they are continually getting worse day by day. That's not to say they won't be resolved. It's just to say what I said very simply. These threats need to be discussed. We need to know what they are, and they need to be addressed soon before the damage is done. Before we get into it, guys, check out the BitGet and Bitfinex exchanges. You need a place to buy and sell cryptocurrency, but furthermore, you need a base place to buy and sell cryptocurrency for cheap and in a secure fashion. Okay, that's what you're doing on exchanges. You're paying them money and fees, and you're trusting them to keep your money safe. So you need to be on a good exchange, or it's logical to be on a good exchange at least, and that's why I've handpicked these 2 exchanges. They didn't reach out to me. They didn't pay me anything to advertise these videos. No, I do it for free. Okay, I do it with an affiliate link. That is all. With that affiliate link, you can get a 15% trading fee discount on your account for life. So go down in the description below or the pinned comment, click on that link and sign up with link, and you'll get that 15% trading fee discount. You help out myself and you help yourself out as well. Bitfinex is global, non-KYC, and BitGet is available except for the USA. So check out those links. Let's get into the content. Right, sketchy territory. I don't want to waste your time. I'm going to do it as quickly as possible here. Just tell you what you need to know. Very big support line here in yellow on Bitcoin. That's a simple fact. Comes back from the 2021 bull market. You may not have seen it. Now you've seen it. Okay, it comes back from the 2 highs of 2021, cuts right across this recent price action, and you can see very clearly it's acted as basically the foundational support zone for this entire range since the start, or middle, I should say, of November. It is being tested right now. We edged below it for a brief period of time, and right now we're in kind of an unconfirmed breakdown. It's not confirmed yet. Short-term price action means nothing. For all we know, it could bounce and we could go upwards from here. That would be great to see, but it's a little bit dodgy territory. The fact that we're even going below it a little bit is concerning, especially considering the context with the S&P 500 breaking down, Ethereum breaking down, and the DXY just continuing to skyrocket. So all eyes on this for Bitcoin. There are some signs of life in the short-term charts, potential support zones coming in. You could see something like a descending channel forming, but it's really too early to tell. I don't want to dwell on the short term. It's going to be continually progressing. By the time this video comes out, it might be a different story. So let's not dwell on the short term. But when the daily candle comes, and specifically when the next weekly candle comes, we will assess where this line is in relation to the price. And if it is gone, that's very bad news. So let's hope this breakdown is unsustained. Let's hope it's just a short-term deviation. I want to clarify something. Even if we do break down from this line, that doesn't necessarily mean the bull market is over, okay? The bull market does not end on a breakdown from 91K with an all-time high at 108,000. The 4-year cycle stemming back from 2012. You need to see more than that. That's just the simple truth. You're talking something like 80K, something like 74K. That's a proper cyclical breakdown that would end the 4-year cycle. Okay, so we're not talking about life or death of the bull market here. We're talking about a significant setback in the mix here, up in the air. Unfortunately, Bitcoin has already seen the breakdown, and the altcoin market is getting hammered. Not good to see. Bitcoin dominance rising. Okay, we could have some problems with the altcoin season if this correction continues. Could see some sort of invalidation of the altcoin season. Hasn't happened yet, but if it does happen, we'll discuss that more. But that goes into some cyclical doubts that could occur if we see a progression in that field. But apparently, unfortunately, Ethereum has broken down from a pretty long-term support line, stemming backwards from the middle of November. As you can see, the middle of November was when Bitcoin found this foundational support zone. The fact that Ethereum has broken its relative level is quite a concern. It's plummeting right now into the bull market support band, and you can see on the volume profile, the next major valley rests at basically 2,800. So it really wouldn't surprise me, to be honest, if Ethereum continues down to that price region, especially if Bitcoin continues the breakdown as well. So not looking too strong there on Ethereum either. In fact, Ethereum's looking a lot worse than Bitcoin. Now, why is this happening? Okay, why are these breakdowns occurring? Well, it could just be a regular cyclical correction. Okay, it could be. I have some doubts that it is. Okay, it doesn't look too normal to me, and that's based on a lot of things, right? But mainly, I think this is a little bit concerning, a little bit more concerning than a usual bull market correction, because the macro environment is not looking particularly strong right now, right? We have some abnormal stuff going on in macro. This is the DXY. This is the US dollar index, basically measuring the strength of the US dollar in relation to assets. A pretty good indicator of how the macro economy is going in general, okay? So if you want to shortcut all macro analysis, you want to shortcut interest rates analysis, shortcut bond, funding rates, shortcut all this kind of thing, not funding rates, sorry, bond yields, you can look at the DXY. It's a pretty good indicator. What generally happens is when the USD, okay, when the DXY goes down, the US dollar index goes down, we see assets go up, including Bitcoin. So we've got Bitcoin here. We'll make it pink just so you can see it very, very clearly. Got Bitcoin in pink. We've got the DXY in candles. You can see the DXY dropping downwards here led to a Bitcoin bull market, or happened simultaneously with Bitcoin bull market. When it started rising, we saw a Bitcoin bear market. When it started dropping again, Bitcoin bull market. Started rising, Bitcoin bear market. And now, what we see is it tanked. The Bitcoin saw the bottom, so it dropped. We saw the Bitcoin bull market begin. But now we're seeing some abnormal stuff. It's meant to be dropping right now, okay? Traditional cyclical theory, the 4-year cycle, is not just a standalone thing for cryptocurrency. It's layered on top of traditional market cycles. We're talking presidential cycle theory. We're talking 18.6-year real estate economic cycle theory. It goes much deeper than crypto. And so Bitcoin, cryptocurrency's performance, does actually rely on traditional markets acting normally to some extent. The problem is, traditional markets aren't acting normally right now. They're not. We're seeing the DXY rise. The DXY is not meant to be rising right now, cyclically speaking. It's bounced off a major support zone. It's seen a rounding bottom. It's broken its neckline, and it's rising. And so far, we've seen Bitcoin essentially trying to fight against this deviation. But we could see a scenario in which there's only so long Bitcoin can do that. We could see a scenario in which, if the DXY continues rising, Bitcoin eventually succumbs to the pressure from the DXY. It stops deviating from a trend. And it starts going downwards, right? There's only so long Bitcoin can fight against a headwind, right? Because right now this is a headwind. We're not meant to be seeing this. We're meant to be seeing the DXY dropping. We're meant to be seeing inflationary pressures massively decreasing. We're meant to be seeing printing starting massively. But unfortunately, what we're actually seeing right now is the DXY pumping, which is reverse correlated to Bitcoin, and therefore very negative for Bitcoin. We're also seeing the Federal Reserve continuously coming out in the last couple of meetings and saying, we're actually going to keep interest rates higher than when we previously expected. You can see the probability of a cut going from 78% or the probability of rates remaining in the same place going from 78% to 97% at the next meeting. Okay, so interest rates are staying higher for longer, and you can see that really taking effect in traditional markets as well. You can see the S&P 500 breaking down from a descending channel formation, breaking down from the bull market support band as well. By the way, the bull market support band and the retest of the bull market support band happened here in September, which is what led to Bitcoin ending its 8-month consolidation in the first place and doubling up to new all-time highs. The fact that we've lost that level is very concerning. So why is Bitcoin seeing weakness here? Why is Bitcoin and cryptocurrency as a whole and altcoins, why are they not really taking off? Why are they consolidating so long? Why is this correction perhaps threatening to go lower? Well, it's because, in my view, the traditional markets and the macroeconomy right now are not really where they need to be and not really where they have historically been at this part of the cycle. Now, this problem could be resolved, right? It just could take some time. As long as we enter a period of QE eventually, right? It doesn't really matter how long the Fed kicks the can down the road, maybe a couple more months, right? As long as it eventually comes, as long as the DXY eventually drops, we should hypothetically come back to a regular cyclical theory, come back to a regular cycle. Right now, it's just not happening. So we're in a bit of a weird situation here. It's very hard to predict because in order to predict what will happen next, we kind of need to know what the Fed's going to do. And of course, no one really knows what the Fed's going to do. So we're going to get into all of this in depth tomorrow. We're going to look at historically how interest rates have affected the S&P 500. We're going to look at the DXY more in depth historically speaking. We're going to look at the S&P in general historically speaking in relation to Bitcoin more in depth. All of this is coming tomorrow. The reason I'm not discussing it today is because I don't think it needs to be discussed today because we haven't even seen a bloody confirmed breakdown yet. So first of all, let's see the breakdown confirmed before we get into this stuff because it is highlighting the bear case perhaps a little bit more than is necessary or a little bit more than is justified pre-breakdown. If the breakdown actually occurs, then we can start discussing it in full. Right now, I'm just bringing attention to these topics just so you know what they are, you know vaguely what's going on, and I'm bringing attention to a fact that right now, Bitcoin is in a sketchy position, so is Ethereum, but the bear market has not been triggered yet. The 4-year cycle at this point is still in play. But even with that bullish reassurance given, okay, the fact of the matter is, I've been publicizing for the last 3 days, ever since the rejection from 106,000, which I saw as the critical short-term level, ever since that level was rejected from, for the last 3 days, I've been getting progressively more and more cautious. I've been sounding the alarm more and more, and that trend continues today. I don't think the market is in a very strong position here. I think we are entering very sketchy territory. Am I willing to say that it's all over? No, I'm not. Okay, I think it will take a lot more than this, but I will like you to know that by the time I'm willing to say that it is all over and a bear market is confirmed, we could be very low on this market. And the reason being is because it's going to take a lot to break a 12 or 13-year, 4-year cycle, which is supported by traditional market trends that go back decades. So, if you are waiting for the absolute end before you get out, you could be waiting quite a long time. You could be down very, very big on your portfolio. Am I saying it's time to sell? No, I'm not saying that. I'm just saying that just so you know, if you're for some reason waiting for my signal, right? That's not how I run this channel. I don't tell you what to do with your money. I don't tell you what to do with your coins. All I do is macro analysis, medium-term analysis, and sometimes short-term analysis. I'm saying that the invalidation zone for the 4-year cycle will be very low. That's just how it has to be given the scale of the cycle. So if you are waiting for the cycle to break as your de-risk point, you could be waiting a very long time. That could be a very dangerous situation. Now, again, I'm saying this all under the pretext of being macro bullish. I'm just saying it for full transparency because I think that's something people probably need to hear, okay? Look, it's all well and good making money, but preserving money is also very, very important. Right now, there is no confirmed breakdown. There is a sketchy macroeconomic environment. Hopefully it resolves and we'll keep an eye on it soon. Or we'll keep an eye on it, obviously, over the next few days as it progresses. Guys, thank you for watching. Hope you enjoyed. Before we finish off here today, check out the Bitcoin and BitGet exchanges. You're trusting exchanges to keep your money safe and you're paying them money and fees as well on every single buy and sell. So you may as well get on a good exchange, right? Bitcoin global non-KYC. You can sign up from anywhere in the world. BitGet is the same, except you can't access it from America. So take your pick depending on your location there. Very good exchanges, low in fees, and with my referral links down below, you can get a 15% trading fee discount for life on either of these exchanges. It takes 20 seconds to sign up. Just use those links down below. Help me and help yourself by getting on a solid exchange with good track record. If you are interested, you can also check out my VIP group on Telegram. I post altcoin trading signals 4 times a week. If you want to gain access to those signals, you can check them out down below on Telegram. Again, PDF of all of the historical trading results there. You can check out the track record for the last 3 years of data, all transparent. I've got nothing to hide. Guys, thanks for watching. I'll catch you soon.